Good morning, everybody. It's Bryan Caprice from Keep Trading Simple, and this is our Monday morning market breakdown. So I hope everybody had a great weekend. We had some, obviously some explosions this week, literally explosions over in Saudi Arabia, which have obviously set the oil market literally on fire. It's been a crazy last 12 hours, I guess, of the oil markets. And again, I think there'll be a lot of newsworthy comments made this week, and in regards to that. So I think it's going to be a crazy week of trading. I hope everybody had a great weekend besides that, and a great week trading last week. So I'm happy to be here with you. From the bottom of my heart as well, for those of you that were in attendance for the special presentation on Thursday, just want to thank you guys so much. I've received so much feedback from it. It was such a great, amount of fun for me to be able to do and share with you guys on Thursday, and I really appreciate that. With that being said, let's go jump into things because we got a lot to talk about today. This is an action-packed week as far as news releases go. And again, I want to look at the charts and talk about this oil situation. So for those of you who are new this week, again, I'm the president and CEO of Keep Trading Simple, and my trading style is really to remove a lot of the distractions from the market, focus on what I consider the most important aspect, which is price action, candle formation, not candlestick patterns, but price action and the way that candles are formed with bodies and wicks and things. I'm not a trader that sits in front of the computers for 16, 18 hours a day. I don't believe in that. I've created a couple different programs, 30-minute trader, 5-minute binary courses, basically different programs for traders that have full-time jobs. The webinar on Thursday last week was basically on news trading, just at the news time that we find on things like Forex Fact. I'll show you guys in a second. I did work for the advisor division of one of the big 3 banks, and then spent about 6 years traveling around teaching people how to trade before deciding that it was time for me just to come home and help raise the kids. Twin boys, they are actually 9. They are actually the same exact age. The bigger one in this picture is actually the smaller. He's actually the younger one, even though he's about 14 pounds heavier and about 3 inches taller. He takes after my dad. And then the little baby over there, she's now, God, just over 15 months old, and teething, about to talk, runs everywhere, but keeps me busy at home. So I don't sit there and stare at a computer all day. So you'll notice a lot of the trades and things that I set up are based off of if this happens, then that. It's an if this, then that scenario. And then again, I use technology, things like alerts, okay? Letting me know it's time to come back to the computer, and it's time to, kind of put my trades on, all right? Or I'll just use technology to put it on if we get to that area. So a lot of different methods, but that's how I trade, so it's a little bit different. So again, if you're wondering why I'm doing certain things, it's because that's the environment and the mentality that I use. But most of the time, I'm taking care of the low one at this point. Let's cover the Nadex risk disclaimer real fast. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decision that you make is solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Okay. Now, with that being said, let's do our top 3 for the week. As you guys know, every week I pick the top 3 news releases that I feel will give us the most potential for market movement in relation to the news. Okay. It doesn't guarantee that they're going to move because, again, the news doesn't always miss the forecast, but it gives us the biggest potential, or these are the ones that I give the biggest potential for the week. Now, number 1 on top is going to be the U.S. Fed funds rate. Now, with this, I mean, basically, whenever you start changing interest rates, that is a huge, huge, huge market mover, okay? Now, it is expected that we will have a cut this week from 2.25 down to 2.0. So that's actually what is being forecast. But with everything going on this week, I feel that even when that comes out, I believe what they say in the FOMC statement and the economic projections, which are released at the same exact time, I think there's going to be some movement in the market. Even if it's just a whipsaw back and forth, this could be a pretty volatile time. So again, make sure that you have yourself protected or you're looking for retests, okay, retracements. I think that's going to be a big market mover this week. Again, especially because, again, the president has been talking about, hey, let's bring it all the way down to 0. Other nations are doing it and they're able to grow. And again, this would be super pro market, super pro business if we lowered it down to that. And some of the talking heads last week were saying, yeah, we could function in that environment. Hyper growth would actually be a good thing. So be interesting to see how they kind of respond to that. So that's why I think that's going to be the number one opportunity this week, or the number one kind of volatile or market moving time. Number 2 and 3, these were very hard because there was a lot of different news releases this week that I could have put into these slots, but I tried to mix them up a little bit. First one would be obviously the early morning pound news. Now, retail sales is always a big number. It doesn't matter which currency pair it's with. Retail sales is a big economic news release. They'll be going this week, Thursday, September 19th, 4:30 a.m. Eastern time. So again, it is an early release. Again, if you want to, you can potentially set that one up on Wednesday evening for somewhat of an overnight trade. But again, big release. The pound has seen strength, especially against the euro in recent weeks. I think there's some good potential. And again, the pound has they got a couple different releases this week that were all worthy of being on this list, but retail sales is one of the most powerful ones that, economic releases that there is. So I put that as number 2. Number 3, this could have easily been number 2 as well. Wednesday night at 9:30 p.m. Eastern time. Again, Aussie employment change. This is basically the Aussie version of non-farm payroll, okay? They have the employment change and the unemployment rate at the same exact time. They're big market movers, and one of the things that I like about this one in particular is the fact that nobody else is really trading at night, okay? There are 2 Nadex pairs you can use to trade this with, the Aussie yen as well as the Aussie dollar. The fact that you don't have the US or the European markets there to kind of counterbalance this typically kind of sets us up for a good trade. And, you can see, half-hour bursts, anywhere from 30, I'd say probably 25 to 35 or 40 pips within a half hour, and moves even longer than that. So definitely some nice little setups that occur these nighttime Australian trades if you're not looking at them. And again, if you're new to currencies, it's a great time to try them at night inside of demo mode, inside of a safe environment. So those are the top 3. Now, with that being said, I grab a quick sip of coffee here. I didn't want to cough in your ear there, guys. Let me actually drag in Forex Factory. I've kind of laid it out pretty well for you guys. Here is what the week is actually looking like at a glance, okay? There's a lot. Last week we were kind of low, right? This week there is a lot going on here, right? Tonight at 9:30 p.m., okay? Tonight we have the monetary policy meetings from Australia as well. So this could potentially be a market mover as well if you're around tonight. Now again, I wouldn't say this is a 1, 2, or 3, but this may have been a 5 or 6 on the list as potential movers. Now, tomorrow is actually the only day this week that it really doesn't have a whole lot going on. And we have some CAD manufacturing sales data. We'll kind of see. Tomorrow, although there's not any planned economic news, I am waiting to hear a little bit of information back from the Saudi Arabia situation. Obviously, they want to get that oil production back online, and they said they could potentially do it in a few days. It happened Saturday. A few days is technically today, but if there's any type of a delay, again, I think they may be a little bit overzealous. I think tomorrow will be the day when they start talking about how much production is coming back online, and I think that could make things a little bit volatile on Tuesday. So I think that's what's going to give us the news there. Going into Wednesday, okay, you have pound CPI data. CPI data is an important one. Again, that's another one of those ones. This could have been maybe number 3, 4, or 5, so it was pretty close to being on there. And again, super early morning release. Then at 8:30, what do? We start jumping into CAD CPI, okay? Now, CAD will have an interesting day this week because it is a proxy for oil, because that's what their economy is more or less based off of. With oil spiking up, this is good for CAD. The Canadian government will make more money, and the Canadian companies will make more money. It'll be good. So I think some of the data will be somewhat blindered this week just because of that. But again, we're jumping into CAD CPI, so there's those opportunities. 10:30 on Wednesday morning, crude oil. Now I'll show you guys some of the information on crude oil. I'll show you a chart that we looked at last week. I just want you guys to kind of get the visualization of what has happened in the last 24 hours with crude. Absolutely crazy moves. I was talking to a very well-trusted friend of mine who trades oil a lot, and he said just the gap from Friday to Sunday on one contract was $9,000 in a single futures contract. So absolutely crazy movement because of all that. And yeah, we'll see. And then 2 p.m. on Wednesday, that's where we jump into the FOMC economic projections, the statement, as well as the cut. Again, it's supposed to be a cut. They told us it was a cut, so it'll pretty much be a cut. Question is, will they cut it more than that? Or if they don't do a cut, then markets will get insane, okay, if they don't do that cut. Because, again, the market now is priced in for this 0.25 drop. Then obviously the FOMC press conference, that's where you can kind of get some of the unscripted news. People get questions that are unscripted, and we'll see. Going into 6:45 Wednesday night, we have GDP from New Zealand. Obviously not a Nadex tradable pair, but again, that is a that is a big, kind of a big deal. A lot of times you'll see New Zealand news will also affect the Aussie dollar. Again, they are both in the same region. A lot of times people consider their economies linked. Then at 9:30 p.m. on Wednesday, bam, that's where you have that non-farm for Australia, the employment change and the unemployment rate. Going into Thursday, okay, then we have a little bit of Swiss news, right? Swiss news is not expected to cut rates, but we do have a monetary policy assessment. All of Europe is talking about recession and easing. The United States is talking about a potential recession of when it's going to happen. I don't see how the Swiss is probably not as well. So there may be some there may be some language in there that we may see some movement in the Swiss as well. We don't see that too often. It's very rare that we actually have a high impact Swiss news because it doesn't necessarily, for the most part, it doesn't really affect global politics. Global economies. Then at 4:30, retail sales. Retail sales is a big number, as I mentioned before. 7 a.m., bam, we hit the bank statement and the policy summaries as well for the pound on Thursday. So a lot of movement, all right? 8:30 on Thursday, Philly Fed Index. Huge, 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 right? Manufacturing is a big deal, right? Manufacturers adjust to what they see in the economy, buying and selling. So it is a leading indicator, but manufacturing indexes are important because if they are not producing, they see a slowdown. If they are producing, they are not seeing a slowdown. Okay, so definitely kind of a foreshadow of what the manufacturing sector is looking at. And then, bam, Friday core retail sales. Okay, we've had retail sales this week, and this is for the Canadian dollar. So just bam, 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 bam. Every day is giving us something this week, it seems like, except Tuesday. And I think that's where the Saudi Arabia news will be. In particular, what I'm looking for is not only that production is coming back online, but what the response back is going to be. Okay. I think what the response back is what's going to kind of move markets. Again, whenever you start messing with oil, there are certain countries that get very upset about that. And this affected 5% of the global production. You wouldn't think 5% is a lot, but again, 5% is a lot, and it went crazy in the oil market. So big thing, to worry about. All right. Now, another thing that we haven't heard much because it just happened is this. Okay. This just came out a little while ago, talking about China's industrial engine slowed a 7-year low in August, even before U.S. trade tariffs took effect. Okay. One of the big things that we've talked about with tariffs is the fact that, hey, listen, we can outlast them on this one. It's going to hurt them and slow them down so much that they're going to have to give in. If they were slowing to 17-year lows before the tariffs happened, what do you think is going to happen when the tariffs actually start showing up there? Obviously, this is going to get even worse for their situation. So this is actually going to probably invigorate the president a little bit. Now, I know this week they are starting to do their talks. I think their preliminary talks are coming in, and I do fully believe they will have a deal by November timeframe. They will get one, but this is going to give a little bit more power back and forth, and I wouldn't be surprised if there are some tweets this week. My students are always joking around and kidding about when am I coming out with a Twitter class, right? If I knew when Trump was going to tweet or when he picked up his phone, I absolutely would, but I don't. But his tweets obviously send the market flying in all different kinds of directions. I think that's going to be big. All right. And again, he has that power. If you guys look at the bottom over here, you see Boris to meet EU's junker for talks over lunch with the Brexit update. Anytime you hear Brexit, it's a big deal. And again, here's that oil thing that I talked about earlier. It may take months for Saudi Arabia to return oil to normal levels. Yeah, I don't believe this. I don't believe it's going to take months. It is their lifeblood. Is basically the only thing that they make money out of. So they're going to do everything in their absolute power to get that production back online as soon as possible. Now, will they say it's not fully back online yet to keep oil prices artificially high? Yes, that I fully believe. But will it take a long time? No. And actually, a lot of the news we heard this weekend was people saying, this is great because we have tankers sitting in the ocean because there's so much oversupply right now. This will be great. Maybe we'll get to use some of those. So it's kind of one of those things. The news is taking this, and again, traders love it because it increases volatility to absolutely crazy levels. It's just, it is what it is, right? It gets a little bit nuts. Now, with that being said, let me pull, before we jump into the currency charts, let's see, crude oil. I'm going to pull something up for you guys real quick. Pull a different site in here real fast. Look at some charts. that's basically what we're looking at. Here's the crude oil chart. So you can see the price was down here. I think I can actually click this. No, it's not going to give it to me that way. I'll just go back to this one. So you guys can see we basically had a gap. We were over here at the 52, 53 level, and then went all the way up over 60. You know, actually we're at 60.33 right now. So we had a jump of about $4 over the weekend from Friday into trading right now. Okay, this is a 10% move in 24 hours. Okay, absolutely huge move, right? Because of production. And again, you're going to see all these things about support and resistance and pivot points. Anybody that was short Friday they're in tears this morning because this was an absolutely huge move. Now, as things come back online, we most likely will expect a retrace back down again. The question is the timing of this one and when we see it, okay? Whenever you see something like this, you will always typically see a retrace. Now, again, the demand level has not changed, right? The demand for oil hasn't really changed at all from Friday, right? I mean, nothing really happened over the weekend, and people said, hey, I need more oil now. I'm going to start driving everywhere. I'm never going to turn my car off. I love it. You're not going to see that, right? So this week, be prepared for this number to start ticking back down. Now, I think today will be a bit wild as retail traders are stepping in, wanting to get involved with this one. I do think it will be a volatile market, but I do see price going back down into the 56 down to 54 range, basically where it was before. I mean, yes, we will eat up some of the supply in these ships, but the demand is exactly the same. I don't see the demand being any different. And if you are an oil producing nation, think about this. If you are an oil producer and you can get $8 more, right, a barrel, why would you not be producing more right now? Okay, I do not believe that the world oil supply is now suddenly shackled to where, hey, we can't get more oil, okay? Look at all the big oil producing countries. I bet you the US, I bet you our guys are like, hey, can we pump out some extra oil to make some extra money? Yes. I'm sure Putin is like, hey, can we get some more oil out so we can make extra money on this? Yes. Venezuela, can we get some extra money out there, extra oil out there so we can make some extra money? Yes. So at the end of the day, this is only this only affects 5% of the oil supply in the world. Will the other nations try to profit from this? Absolutely. Okay, so again, when they're trying to profit for it, it also gives us the ability to do the same thing. Is this going to take us up to 100? I don't believe so. I think we're more, looking for a retest to the bottom, to the downside. Okay, and again, it's just finding where that kind of turning point is going to be. And again, use your analysis. It actually did gap up into an area where we expected a retrace. So we'll see. Again, we'll see how that one kind of turns out. All right. So with that said, let me jump over into the charts and we'll start looking from here. So obviously, all the charts are a little bit wacky today. Whenever you have that big of a movement in something like oil, it will typically make gaps. And one of my students messaged me yesterday. It was like gaps, gaps, gaps everywhere, which is true. I expected all those things. And for me last night, I was like, yeah, it's going to get super crazy today. Last night, I was like, you know what? I'm not even going to look at it. It's going to be just absolute wackiness as it happens. So looking at the first of the Nadex pairs, you guys can see, obviously we were sitting up inside of this daily zone. We talked about this last week. This is the last time we saw strong downward pressure. And last week we were talking about there being some type of a retest. We had 5 or 6 days in a row. Nothing was pulling back. We're like, it can make the attempt up, but you would think you would have to, right? An impulse and then a corrective move, but it went all the way back up to this area, hit the area, and then what did it do? Bam, it gapped down. Now, it did retrace a bit up and is now pushing down, but it is still pushing off of that area. Again, whenever you see large areas like this, large, huge extended range candles, it shows you that there are sellers above. In this pair, yes, I am still biased in this pair. I am still bearish to the downside. Obviously, entry occurred up here, right around where this gap area was at 74.37. And again, it's gap lower. And again, its gap kind of went to where you expected it to go to. It would have actually hit the first profit target already in its gap. And again, we're going to take this. And again, me personally, I'm more bearish this week. If you are, you have to do your own analysis and come up with your own conclusion on that one. I'm not telling you what you guys should do. But a little bit more bearish. Now, looking at the Aussie dollar. Okay, Aussie dollar had a very similar situation. Now, this one didn't have the super kind of clean, kind of fine entry that the Aussie yen did. You can see this one kind of kept pushing, right? Kept going higher, 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 higher. And again, did not have the gigantic kind of gap to the downside, but it's run into the same scenario, right? It's pushed up into a daily level of supply. Okay, it's had a hard time pushing through, and it's kind of gotten very, very choppy. It's like a sawtooth, right? It's up, down, up, down, up, down, up, down, and kind of pushing to the side now. But with dollar strength coming into this, you'll see this thing kind of retrace back down again. And it's kind of funky. You start seeing gaps, and it's just all green candles up top. But again, if you're using the gap in there, you're going to see a bit of, bit of a jump. And again, we closed here and then opened all the way down here. So there technically should be kind of a red candle in there to show that. But again, we're looking for the U.S. traders to come online, some dollar strength. And again, cutting interest rates doesn't give you dollar strength, but I think some of our responses this week will be kind of what drives this down. Or again, if the tweet is not a good tweet, we could see kind of a punch through the top. But again, we're on a ledge. We're running into an area of sellers. Again, this is where you take advantage of, what a Nadex contract can do, in my eyes. And we see what we can get set up. Now, looking at euro pound. Okay, euro pound hit an area that we talked about. We had this large push down. Again, this thing has been a pretty healthy drop to the downside, right? Impulses, corrections, impulses. A bit of a basing here, and then strong move down. Got a little bit of a bounce off this area up, and then kind of push through, retrace, and push back down again. So we ended up just getting into a target or an entry now, based off of a 4-hour basing level, a little bit hidden that hit early this morning. Not something we can jump into now, but we are kind of at a low. All right, when we're talking about this, you can see we have an area of kind of, I would say it's somewhat healthy, right? But we have finally broken through. We are at the 88.50 area. Again, psychological level. That's what we bounced off of right here, which is 88.51. There's a lot of pound news this week, okay? I see them taking further pushes down. You can see it was a slow grind of indecision and then kind of a pop at the very, very end. And again, this is all Brexit based. Now we're kind of seeing the same thing in the other direction. Hearing things about, Boris Johnson meeting with people over lunch to discuss Brexit updates and things. I mean, I don't think too much has been decided, but he obviously has to have some type of a plan. As we start to hear those things, I feel that we can continue to push this on a downside. Now, obviously, we are looking for pullbacks, and that's where you want to get in. You guys can see this kind of this down arrow with the box. Again, downtrend. It was a setup. It was pulling back. It hit a level in the 4-hour, and now you're seeing it kind of drop. And again, that's been about a 30 pip run so far. We'll see how much further we're able to go if we're able to run all the way back down to kind of the start of this move from Friday. We'll see what we can get out of this one. But again, right now I'm still looking for pullback levels, looking for, again, I'm definitely looking every single time we have a news release and it says pound, I am looking at this pair first. I want to see where it's bouncing. I want to see what levels it's going to. I think this is going to be the pair to watch this week. I'll be watching this one pretty much every day. Now, looking at euro yen, again, euro yen is not as exposed to Brexit. It is exposed more to European news. And again, you guys can see, interesting situation. Okay, we talked a couple weeks ago that we had this kind of sideways level. We broke out of it, we retested, and now we have officially, it's out. We can actually get rid of this area. It's no longer of concern. Price did not actually rally all the way back up again. And you'll see we had a bit of a gap here as well, right? Gap kind of shot down. It made an attempt to come back up, but didn't quite make it. Now, this one, interesting enough, it actually created its own level. Okay, this is not something that I caught. I was asleep, but you guys can see right there, it came up and then actually started its retrace back down again, and then again came back up, tested that same area, and now it's off to the races. If you do look on from basically the Friday candle, we are in what we would call a racetrack. Okay. Again, this is a gap in the opposite direction, which is kind of a signal for us that, hey, listen, a gap down. If it pulls back up, we're going to look for entries to continue to take it short and retrace back down again. For me, potential target areas of this one are going to be 117.90-ish, really the start of this large green candle here. As this pushes down. When the U.S. market comes online, again, that will assist this because the yen is a proxy. Don't forget that. So I do kind of see this going to the downside. If for some reason price is able to rally back up, though, I do believe this 120 area is going to be somewhat of a line in the sand. The way that it formed, I mean, it put multiple, higher lows in. I'm sorry, lower highs in. There's definitely people stepping in at this one around this 120. You guys can see at the very, very top here. That 120 mark is literally what it ran off of, a huge psychological level. Basically it's a 3-0 level. So I think that'll be a pretty nice level if we manage to get back up there to start looking for shorts as well. And again, profit targets down here at the, probably down here at the 117.90, about 100 pips lower than where we are right now. That'll take multiple days to do it. Dropping over euro dollar. Euro dollar, very similar, right? Very, very similar trade. Huge spike up, kind of went across. You have the failure to go higher. You come back down and bounce, grab some more zones, boom, break. And then again, here's your color change to the downside. A little bit of a hiccup right here. Obviously, we had this kind of big pull right here. See if I can stretch this out, make it a little easy. See that right there? we had this kind of impulse, this correction move. It found more buyers and then pushed higher, and that's kind of where we're sitting right now. It's chugging through it. It's running through, but just be aware that that is there. You guys can see we're kind of right at the base of it right now. A push much lower. Again, we're off to the races, and the next hiccup will be at 109.88 range, where you see this wick over wick. Okay, so again, bearish this one as well. It's almost the same charts. That's what I'm looking for in today. Looking at pound yen. All right, so you guys can see this one we had off a little level of basing last week, and we said that obviously going all the way back up may be a little bit difficult, right? We talked about it's a little bit far. I mean, it potentially could travel there, but guess what? It actually did. This zone, it ended up giving us a pullback from it, and we had a bit of a gap, and then it was off to the races. So it did provide us the pullback we were looking for, but again, didn't give us a strong move. And then what happened? It went all the way up to the next zone up that we had talked about, saying it had the potential, it can possibly go there, and guess what? It did. It went all the way up. You guys can see it hit the very, very bottom of this level over at 135.00. Again, psychological level, which just happens to be where this yellow line is right here. And what did it do? It literally hit the 135, went slightly above to get orders filled, and then boom, has turned and kind of pushed to the downside. On this chart as well, if we set a horizontal line, you guys can see there's the 135. It went just above, ended on Friday, and that's what we talked about. Remember, when we're ending at these levels on Fridays, a lot of times we can expect a gap. And that's what we got. We ended up getting the gap all the way down, right? And then again, this was the oil issue. And what did it do? It came back up. It retested a level that we had previously marked off, and it has now started to push back down again. And again, it has hit a profit target. You guys can see right here, it is already hitting and bouncing off of this pullback. As it pushes through again, it looks like it's going to want to come down and come over into the 133.52 area, or 133.50-ish area. Again, 50 is not quite as good as 0.00, but it's right there. It's real close. Okay. Again, we've had so much strength in this pair. With any bad news today, I would like some retraces back again, but I do think, again, if we start getting, good news on top of good news on top of good news, I think this could be, I think this top zone could eventually, I think we could break and we can start getting back up into the, maybe the one, maybe the high 30s, maybe low 40s. Like I said, this pair was beat up so much, and again, you guys can see very, very, quick drop. It hit a level of basing. Actually, this is from a prior buying zone farther back, and we've been pulling back up again. So we'll see. I think getting some more certainty from Brexit will help turn some strength into this pair. Going across to the pound dollar. Okay, pound dollar did the same exact thing. There was the bottom. Grab the second blue line. There was your top. You guys can see. Same thing. It rallied right into there, turned and kind of turned around. This is not the same as this one. Those are a little bit different. But you guys can see, kind of came up. It is retracing back again. It's a very healthy retracement. You guys can see, you had your color change happen right here with this red, this green candle, then this red, and it just continued to grind, push, grab these orders, pulled up, and again, it is starting to kind of push and retrace back down again. Won't be surprised if it comes down to 123.50-ish, which is right here. Okay, 123.50 is right where my cursor is on the right-hand side. Okay, that's the profit target for me today. I would like if we could kind of take that over. This pair does have an ATR of 105 right now, so it does have the potential to drop that low. We're talking about what? About 70 pips right now. It would need to move to the downside, so it is possible for it to be able to drop that far today. As I said, as U.S. traders in the U.S. market comes online, they are going to react to the oil situation, and I do think that's going to make things a bit kind of crazy, particularly with the dollar and oil being linked. I think that we'll see some movement in these pairs, and yeah, I kind of want to see what that looks like once they come online before I step into anything. And in something like this, because again, the pound also has it has some exposure to oil as well. Looking over across the dollar CAD, as I mentioned before, dollar CAD has a lot of news releases later in the week. It has some CPI. It has some, obviously, crude oil is going to affect it. It also has the core retail sales on Friday. This pair literally came down, and talk about a great bounce last week. It literally came right off this bottom level that we had mentioned that, hey, listen, we've seen price hit this area before. And again, this is supply and demand. When you're reading price action, these are the levels that you're looking for. It came down, bounced, and whew, it was off to the races. It went all the way back up again. Now, this gap from last week, it was so far, it wasn't able to obviously, take that over, but it made a valid attempt pushing up again. And again, you guys can see here's the gap that we saw over the weekend. Now, this pair will be at the mercy of oil this week, okay? When oil goes up and down, it does affect the Canadian market because they are oil exporters. They export basically everything to the United States. We refine it and then sell it back to them for 4 times the price. They will be at risk this week when they start talking about oil prices. Oil, higher oil is good for them. It will help their companies profit more and helps their overall economy. So just be aware of that. Everybody else would say oil, it's high, that's bad. It's going to cost us more to ship and everything else. But Canada's like, yes, we love it. That's how we get more money is when oil prices are higher. So this is actually, good Canadian information. Okay, as more unfolds this week, again, this pair will be at the mercy of oil news. Looking across at dollar Swiss. Okay, dollar Swiss has been literally all over the place. It's been using this upper level. Again, this was drawn on the 4-hour zone. And you can see we've kind of pulled off of it. Again, this gap here was not surprising. This is a geopolitical-based pair. Any news that is released about any type of retaliation back to rebels or Iran or anything will send this pair kind of tumbling to the downside as there is a flight to head towards, the Swiss, right? The Swiss is the pair because of neutrality. Whenever there's any type of turmoil, this is where you go, okay? This is where people are going to be looking to go with any type of news. If we send a drone strike in, or we say we're going to send a carrier or a destroyer or cruise missiles to go defend our, allies in Saudi Arabia, that's where this pair is going to be kind of at risk this week. So just be a little bit cautious here, cautious about that. Still bearish. We are still up in this zone again. It's kind of bounced back and forth again. I think it is already kind of to start its kind of process to the downside. We'll see. Again, this was a strong level that it bounced off of. You guys can, it was 3 strong candles down, and that's what we hit. So I'd like to see that pattern continue. And then last but not least, looking at the dollar yen. Okay, dollar yen had this little kind of hidden zone that we had talked about. It actually went over. Friday it ended above, which I was kind of happy. I was like, all right, it's in a nice area. It's doing a little bit of a pullback on Friday. It looks like we're going to make an attempt up, and I'll be looking to get short somewhere up in this range when we got up into the, closer to the 109 area. Unfortunately, this one was a definite byproduct of what happened over the weekend with oil. You can see the gap on this one was quite large. Taking a ruler here. Here's where we closed Friday. Here's where we opened. You can see it's about a 60 pip drop. The ATR in this pair, and again, obviously it's stimulated by today, is only 65 pips. Okay, it offered an entire 1-day gap just because of what happened in the oil situation. And a lot of this is going to be, again, this pair is going to be hinged on what happens with oil. Okay, unfortunately, although we are not as dependent on oil as we used to be, a lot of people still believe that we are. And we'll see how U.S. traders take it today. As I said, futures traders, it's going to be just craziness, right, for them today. But we'll see how the overall market reaction, what the responses back are. When everything comes online, if the statements are, we're sending armed forces over there, we're going to squash the rebels, we're going to do this, that's going to be one thing. If the UN says that we're going to do that, it's going to be different. But if the U.S. steps in, people are not necessarily, people don't necessarily like war, even though it tends to be good for the economy and everything else. But in this political environment, who knows? Okay, we'll see. And again, as that kind of unfolds today, we'll get a little bit more of an idea of, okay, are we sending a response? What does our response look like? Is it going to send soldiers? Is oil, are we expecting this to happen again? Is oil going to be higher? Whenever you hear things like, hey, rebels hit us with a strategic drone strike, it's like, where the heck are rebels getting drones? Like, I don't have a drone. How come rebels have drones? Where do they get them from? I think those are the questions when we hear more about it. Is going to send this pair a bit kind of crazy. Overall, though, I didn't expect this much of a pullback, but again, I didn't expect what we saw. I was looking for a continued kind of push up into the 109 range before I got short. I'm kind of questioning that now. What I'm looking at now is probably if we get up into this 108 range, looking for that as a kind of a trigger for me to start going, bearish in this position. I'm going to let it do its thing. I'm going to let it kind of grind its way sideways right now. Again, when U.S. traders get aligned, we will see continued movement. For me, I'm going to be looking if we can get below 107.46. That's going to be a trigger that, hey, listen, that went below the gap. This is obviously a bearish market. How do I take advantage of that? Where's a pullback? And vice versa to the top side. We get up to 108.06. I'm going to be thinking the same thing. There was something, obviously the Saudi Arabia situation pushed us down that far, but we were already starting to get lower highs. Is this going to be the point where we're going to see this retrace come up and then it's going to get pushed back down again? So for me, that's kind of what I'm looking for the week, guys. That's basically it. basically it's going to be crazy. So that's kind of a week at a glance right now for us. And again, that's kind of what I'm looking for today. I think we'll find out a lot. Remember, I will be on tomorrow morning as well, and I think we'll have a lot better idea of where the market's going to take us this week. I think there'll be a lot of responses today for oil. I think futures, again, it's going to get crazy. If you guys want to have some fun, go over and look at the commodities today, particularly the oil futures inside of Nadex. There's going to be some movement. I don't even know what the volatility is yet on them, but it's probably going to be quite high. So if you have questions about anything I said today, again, this is how you guys get in touch with me. Support at keeptradingsimple.com. You can just go to the website. You can check us out on Twitch at night as well. If not, I will see you guys tomorrow morning, and we'll do our Tuesday trade talk. And again, not as much news to cover tomorrow. We'll be dumping in the charts a bit more. So everybody have a great trading day. Make sure you stay safe, watch your stops, and I will catch you guys tomorrow.